This voice is taken from an article with the title, How Does the Risk Sentiment in Broader Financial Markets Affect Forex?, which has been published on TRADERTALKSNET. The risk sentiment in broader financial markets affects Forex in many different ways. Risk sentiment can be defined as the general attitude of investors towards risk. When risk sentiment is positive, investors are willing to take on more risk as they expect to earn higher returns. When risk sentiment is negative, investors are more likely to shy away from risky investments as they fear losing money. In the Forex market, risk sentiment plays a huge role in determining market conditions. When risk sentiment is positive, the Forex market tends to be more volatile and traders are more willing to take on positions with larger amounts of leverage. This leads to higher levels of liquidity and increased trading volume. On the other hand, when risk sentiment is negative, traders tend to be more conservative and take on smaller positions with less leverage. This results in lower levels of liquidity and decreased trading volume. Positive risk sentiment can also lead to an appreciation in the value of a currency since investors are more willing to purchase that currency. This can lead to a strengthening of the currency, which can benefit those who are holding positions in that currency. On the other hand, negative risk sentiment can lead to a depreciation in the value of a currency since investors are less likely to buy it. This can cause a weakening of the currency, which can be detrimental to those who are holding positions in that currency. Risk sentiment can also have a big impact on the overall health of an economy. For example, if risk sentiment is positive, investors may be more inclined to invest in businesses, which can lead to increased economic growth and higher levels of employment. On the other hand, if risk sentiment is negative, investors may be more likely to stay away from certain investments, which can lead to slower economic growth and higher levels of unemployment. Overall, the risk sentiment in broader financial markets can have a significant impact on the Forex market. Positive risk sentiment can lead to increased volatility, higher levels of liquidity, and appreciation in the value of a currency. On the other hand, negative risk sentiment can lead to decreased volatility, lower levels of liquidity, and depreciation in the value of a currency. Therefore, it is important for investors to pay close attention to risk sentiment in order to make informed decisions about their investments.